Hey money people, welcome back to Stick to Money. So silver just did something absolutely insane.
1 year ago, you could buy an ounce of silver for about $30. Today, it's trading at over $103. That's more than a 200% gain in 1 year.
To put that in perspective, if you invested $10,000 in silver in January 2025, you'd have over $30,000 right now. That's better than Bitcoin, better than the S&P 500, better than just about anything. So today, we're breaking down exactly what happened, why it happened, and most importantly, what you should do about it right now. Let's dive in.
Okay, first, let's talk about just how crazy this rally has been. Silver started 2025 at around $30 per ounce. Pretty normal, nothing special. And it remained at that level until mid-2025. But then something happened. It started climbing. $35, $40, $50. By October, silver broke through $50 for the first time in over a decade. People thought that was the peak. They were wrong. It kept going. $60, $70, $80. And just this week, silver hit an all-time high of about $103 per ounce. That's up nearly 250% from where we started in less than 13 months. Now, let me put this in context for you. Gold, which everyone talks about, went up 66% in 2025. That's great, but silver went up 3 times more. The S&P 500 up about 18% in 2025. Again, solid, but nowhere near silver's performance. Bitcoin, well, that was not a Bitcoin year. Its performance was even negative with about -6%. Silver absolutely dominated everything else in 2025. But here's the thing nobody's talking about. This wasn't a smooth ride. Just last week on Friday, silver crashed 4% in a single day, dropping from $94 to below $89. 2 days later, back up over $94, setting new records. This is what makes silver both exciting and terrifying. The volatility is real. Okay, so why did silver explode like this? There are actually 5 major reasons, and you need to understand all of them. First up, we're running out of silver. And I don't mean someday in the future, I mean right now. For the past 5 years in a row, global silver demand has exceeded supply. In 2025, the world used about 1.24 billion ounces of silver, but we only produced about 1.01 billion ounces. That's a deficit of 230 million ounces. That's equivalent to the entire annual output of Mexico, the world's largest silver producer, just gone. And here's the kicker. These deficits are getting worse, not better. Since 2021, we've had cumulative deficits of about 800 million ounces. That's nearly a full year's worth of global mine supply just disappeared. Silver inventories in London, New York, Shanghai, they're all at multi-year lows. The warehouses are running dry. Reason number 2. Industrial demand is going absolutely crazy. Here's something most people don't know. Over 50% of silver demand comes from industry, not investors. Silver is essential for solar panels. This is huge. Solar demand alone is projected to consume more silver each year. Electric vehicles, AI data centers and semiconductors, 5G infrastructure, medical equipment, electronics. And here's the problem. This demand is inelastic. What does that mean? It means factories need silver to operate. They can't just say, oh, it's too expensive, we'll skip it. If they don't have silver, production lines shut down. So they'll pay whatever price necessary to keep getting it. Solar panel manufacturers alone are consuming record amounts of silver, and that's only accelerating as the world shifts to green energy. Reason number 3. Here's where it gets geopolitical. On January 1st, 2026, literally a few weeks ago, China implemented new export restrictions on refined silver. Why does this matter? Because China controls 60 to 70% of the world's refined silver supply.
Under the new rules, only large state-approved companies can export silver, and they need special government licenses. To qualify, companies must have annual production capacity of at least 80 tons of silver. This effectively blocked hundreds of smaller exporters who've been supplying global markets for years. Overnight, a huge chunk of global silver supply just got locked down. And it's not just China. The US officially designated silver as a critical mineral in 2025 due to its key role in green energy and national security. When governments start treating something as strategically important, that creates long-term demand that doesn't go away.
Reason 4. The world is getting scary and people want safe assets. In the first few weeks of 2026 alone, we've seen Trump threatening tariffs on European nations over Greenland, Venezuela crisis and oil blockades, the Trump administration raiding Venezuelan leadership, Fed Chairman Jerome Powell under investigation, and growing tensions between the US and China. When the world gets chaotic, investors flee to safe haven assets. Traditionally, that's been gold, but silver is now getting that same treatment. And because silver is cheaper than gold per ounce, it's more accessible to regular investors. This is driving massive retail demand. Last reason, the Fed. In late 2025, the Federal Reserve started cutting interest rates. When rates go down, yields on savings accounts and bonds drop. That makes non-yielding assets like silver more attractive. Plus, with concerns about inflation still lingering, even though it's cooled from the peak, precious metals look like a smart hedge. Real interest rates adjusted for inflation have been compressed, and that historically benefits silver. So you've got all 5 of these forces converging at the same time. Number 1, physical scarcity. Number 2, exploding industrial demand. Number 3, government export controls. Number 4, geopolitical chaos. Number 5, favorable monetary policy. That's why silver didn't just go up a little, it exploded. Okay, so here's the question everyone's asking. Is it too late to buy silver? I'm going to give you the honest answer. Nobody knows for sure. But let me break down the bull case and the bear case so you can decide for yourself.
The bull case is pretty compelling. First, those supply deficits aren't going away. Mining companies can't just flip a switch and produce more silver. About 75% of silver is mined as a byproduct of other metals like copper, zinc, and lead. That means even if silver prices triple, miners can't easily increase supply because they're driven by base metal economics, not silver prices. Plus, new mining projects take 8 to 12 years to develop, so we're locked into these deficits for the foreseeable future. Second, industrial demand is only accelerating. The green energy transition isn't slowing down. AI isn't going anywhere. The need for silver and technology is growing. Third, we haven't even seen a real silver squeeze yet. Remember the GameStop situation? Retail investors coordinating to drive up a stock? Some analysts think that could happen with silver. If physical buying accelerates, we could see much sharper price moves. Right now, several major analysts are predicting Bank of America $85 to $100 average for 2026, potentially up to $309, UBS $95 per ounce, Citi $110 in the second half of 2026, some extreme forecasts $175 to $200 by end of 2026. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is currently around 50. Historically, it's been closer to 15 to 20. If we return to historical norms, silver would need to be way higher.
But now, let me give you the bear case, because it's important. First, silver is volatile, like crazy volatile. It crashed 4% in one day last week. In 2011, after hitting $48, it crashed 30% in just a few weeks when the CME raised margin requirements. Second, we could see a global economic slowdown. If manufacturing slows down, industrial demand drops. If demand drops, prices fall. Third, if the Fed raises rates instead of cutting them, that would hurt silver. Higher rates make bonds and savings accounts more attractive, pulling money out of precious metals. Fourth, we could see profit taking. A lot of smart money got in early. They're they're up 200%. Many might decide to cash out and lock in those gains, which could trigger a sell-off. Fifth, the current price might already have all the good news priced in. Sometimes assets rally on anticipation, and then when the actual events happen, there's nowhere left to go but down. So here's my take. Could silver rise higher? Absolutely. The fundamentals support it. Could silver crash back to $60? Also possible, especially if there's a liquidity event or economic slowdown. This is not a safe investment. This is a speculative, volatile asset that requires you to have a strong stomach and a solid risk management strategy. Okay, so if you decide you want exposure to silver, how do you actually do it? You've got 5 main options and they're all very different. First, physical silver, coins and bars. Pros: you own the actual metal, no counterparty risk, tangible asset you can hold. Cons: premiums above spot price. You pay 15 to 25% over the market price. Storage and insurance costs. Hard to sell quickly. Have to worry about theft. Popular options: American Silver Eagles, most recognized. Canadian Silver Maple Leafs. Silver bars from reputable mints. Where to buy: APMEX, JM Bullion, SD Bullion, local coin dealers. Second option: silver ETFs, exchange-traded funds. Most popular: SLV, iShares Silver Trust. Pros: super easy to buy and sell, just like a stock. No storage headaches, low fees, high liquidity. Cons: you don't own physical silver, you own shares in a fund. Small expense ratio, around 0.50% annually. Can't take physical delivery. This is what most retail investors choose because it's simple. Third, silver mining company stocks. Examples: First Majestic Silver, AG, Pan American Silver, PAAS, Hecla Mining, HL. Pros: leveraged exposure. Mining stocks often move more than silver itself. Can pay dividends. Potential for huge gains if managed well. Cons: company-specific risks. Management, accidents, regulations. More volatile than silver itself. Not pure silver exposure. Affected by operational issues. Fourth, silver futures contracts. This is for advanced traders only. Pros: high leverage. Can go long or short. Most direct price exposure. Cons: extremely risky. Can lose more than your investment. Requires knowledge of futures markets. Not for beginners. Seriously, if you don't know what you're doing, stay away from futures. Fifth, silver in a retirement account, a silver IRA. You can hold IRS-approved silver coins and bars in a self-directed IRA. Requirements: must be 99.9% pure. Held by IRS-approved custodian. Can't take physical possession while in the IRA. Pros: tax-advantaged growth. Diversifies retirement portfolio. Cons: setup fees and annual storage fees. Less liquidity than regular accounts. For most people, I'd recommend starting with a silver ETF like SLV. It's simple, liquid, and you can start with any amount. If you want physical silver, buy from reputable dealers and start small, maybe a few ounces to see how you feel about it. And for the love of God, do not put your entire portfolio into silver. Financial advisors typically recommend no more than 10 to 15% of your portfolio and precious metals, with total precious metal exposure capped at 20%. Silver should be a diversification tool, not your entire strategy. Before you rush out to buy silver, let me hit you with some hard truths. Silver can swing 5 to 10% in a single day. If you can't handle seeing your investment drop 20% in a week, silver is not for you. Silver doesn't pay dividends. It doesn't pay interest. It just sits there. Your only profit comes from price appreciation. If the price doesn't go up, you make nothing. Here's a stat that might surprise you. Since 1921, silver has underperformed the S&P 500 by about 96%. That means if you invested equal amounts in silver and stocks back then, the silver portion would be worth 96% less today. Silver is not a long-term wealth builder like stocks. It's a hedge and a speculation. Anytime something goes up 200% in a year, you have to ask, is this a bubble? We've seen silver bubbles before, in 1980 and 2011, that ended in spectacular crashes. This time might be different due to the structural supply deficit, but it also might not be. If governments change export policies or if the Fed dramatically shifts course, silver could reverse quickly. If we enter a recession and industrial demand craters, silver gets hit hard. Unlike gold, which is mostly an investment asset, silver's industrial uses make it vulnerable to economic cycles.
Okay, so what would I personally do if I were looking at silver right now? Disclaimer, I'm not a financial advisor. This is just my opinion based on the research. You need to make your own decisions. If you're conservative and don't like volatility, I'd probably skip silver entirely or limit it to 3 to 5% of your portfolio max. The risk to reward at current prices isn't compelling enough for conservative investors. If you're a moderate investor who wants some exposure to the silver thesis, I'd consider a 5 to 10% allocation through an ETF like SLV, dollar cost average over 3 to 6 months rather than lump sum, set a stop loss at 15 to 20% below your entry price, and plan to hold for 1 to 3 years. If you're aggressive and believe in the bull case, 10 to 15% allocation across ETFs and physical, maybe add some silver mining stocks for leverage, be prepared for a wild ride, and have a clear exit strategy, either a price target or time horizon.
What would I not do? I wouldn't put more than 15% of my portfolio in silver. I wouldn't use leverage or futures unless I was an expert. I wouldn't buy at all-time highs without a plan. I wouldn't panic sell on dips if I believed in the long-term thesis. If you do invest in silver, watch these indicators. 1. Industrial demand data, especially from solar and EV sectors. 2. ETF inflows. Are institutions buying or selling? 3. Inventory levels. Watch COMEX, London, Shanghai warehouse stocks. 4. Fed policy. Rate cuts help silver, hurt it. 5. Dollar strength. Weak dollar equals stronger silver prices. 6. China policy. Any changes to export restrictions. All right, let's wrap this up. Silver just had an absolutely historic year, gaining over 200% and hitting all-time highs. This rally is being driven by real physical supply deficits, exploding industrial demand from green energy and tech, government export restrictions, safe haven demand during geopolitical chaos, and favorable Fed policy.
Could it keep going? Absolutely. Many analysts see $100 to $110 as realistic targets for 2026. Could it crash? Also, yes. The volatility is extreme, and we've seen silver bubbles burst before. The fundamentals are stronger than they've been in decades, but that doesn't mean the price can't pull back sharply before going higher. If you decide to invest, start small, use dollar cost averaging, don't bet the farm, have an exit strategy, and understand the risks. This is not a get-rich-quick scheme. This is a volatile, speculative asset that requires careful risk management. But if the supply deficit thesis plays out, and it very well might, silver could have a lot more room to run. Just make sure you can handle the ride. If this video helped you understand what's happening with silver, smash that like button and subscribe to Stick to Money for more breakdowns of complex financial topics made simple. And let me know in the comments, do you own silver? Are you thinking about buying, or is this rally making you nervous? I read every comment and I'd love to hear your thoughts. I'll see you in the next one. Stay smart with your money.